Good afternoon and welcome to the SUPERDRY PLC full year results investor Q&A session. Throughout this recorded Q&A session, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll.
Ladies and gentlemen, thank you very much indeed for joining us this afternoon for a brief overview of the full year results for 2022, along with, of course, any questions that you may have for the management team from SUPERDRY. I'm delighted to be joined today by Julian Dunkerton, CEO, and Sean Wills, CFO, who I'm sure, like me, are looking forward to receiving your questions on the back of the results, which I'm sure you've all had time to access. Julian, I hope it's okay, but before we look to take any questions, if I can maybe hand back to your good self and to Sean, just to give a brief overview of the full year results and any highlights, and then we'll start with the investor Q&A.
Hi there. Well, actually, I think I'm going to pass you over to Sean immediately, just to give a sort of brief overview, and then I can talk in depth about product, sustainability, e-com, stores, marketing, and everything else. So, Sean.
Okay. Good afternoon, everyone. I'm sure you've seen or read about our presentation by now. I think the message we were trying to land was that it was a good performance last year in what is clearly still a difficult market, with the headline being that we're back to profit. And the profits we made at 21.9 million compared to a loss of 12.6 million the year before, which is a big turnaround as we came out of the worst of COVID, but not forgetting that actually last year was still COVID affected, and that we were hit by the Omicron variant just as we went into our peak Christmas trading period. So to come out having delivered a profit despite having dealt with that, which had impact not just in the UK, but more importantly and more significantly across a lot of our European markets, we're really pleased with that. You might have read that 21.9 has been flattered by a one-off Forex benefit. We had about 12.5 million of Forex benefits in the year. 3 million of that is normal business and it's the same pretty much year on year, but there was a 9 million one-off to do with revaluing our intercompany loans in the USA. So even if you strip that out, we're still running around 13 million of profit. So we felt that made quite a big statement in terms of the business getting back on track. I think just going through these numbers, there's a couple of points to raise. We'll talk about the profit number ad infinitum. The other thing worth just bringing up quickly is the working capital, which on the face of our P&L account here doesn't really show any movement, going from 124 million last year to 121 million this year. But there has been a lot of really good work done behind the scenes to bring our inventory levels down. And we've done that quite dramatically, and I'll come back to that in a moment. And then also just worth referencing the net debt cash position, which has declined year on year from a 38.9 million cash balance in FY21 to a 1 million cash or debt balance by the time we hit the end of FY22. And I will touch on that now, because I think that's really important to understand that from operations, really, our cash generation was pretty much nil last year, and that's as a result of that Omicron variant really hitting us hard in Q3 and going into Q4. And against that, we had a capital investment program that did not return to normality, but certainly went back to more normal levels than we'd seen during the pandemic. And we did spend around 17 million on CapEx to fund our two biggest projects, one of which was the implementation of the new e-commerce platform, which is going to pay huge dividends going forward, and you'll hear about that shortly from Julian. And the second was the replacement of our merchandising system. The one we were using had reached the end of its life, legacy system. We needed to replace it. We did consider whether we should continue with that project, but it was actually more efficient to continue rather than pause it. And again, going forward, we will leverage some massive benefits from that, because essentially that's what drives our entire stock allocation across our quite complex myriad of channels and geographies. So that will pay dividends in the near term. I think what was more interesting for people, though, perhaps than looking at what happened last year, which is a good 20 odd weeks ago now, was the statements we made on current trading. And I think you probably saw the numbers that we announced, which, we've got a full house of positive trading for the last 22 weeks. And importantly, I think a double-digit growth coming from our stores. That's an area where everyone's been a bit concerned post-pandemic about whether you would see any return of footfall onto the high streets. And I think you can see very much from the stats you're reading in the press, but also from some of the announcements that have come out from other retailers recently, that is definitely starting to happen. And it's hurting the pure play guys, but for people like us, the multi-channel, we're seeing a real boost from that. So 14.3 increase over those 22 weeks. And encouragingly, that's being seen across all our geographies as well. It's not just a UK-centric thing. This is happening everywhere. And on top of that, whilst a lot of other businesses that are just in the e-commerce space are showing declines on their pandemic peaks, we're still demonstrating growth in e-commerce as well of 4.5%. And whilst it's a reasonably small number, our wholesale performance was also positive at plus 1.6. So 7% growth overall in what is a very tough market. I think we see that as very good news. And I think what's also quite exciting is as we've got towards the tail end of that period, the trading has got stronger and stronger. And the start of autumn winter has been really encouraging when you contrast it against the economic backdrop we're operating within. And a couple of stats that put that in perspective, which I think are quite useful. In September, we had 2 of our biggest September weeks in retail, which is stores and e-commerce, that this business had ever had. So, you know, despite the doom and gloom being predicted for the clothing market, for us to have broken our records in September, I think is fairly impressive. And then perhaps even more significantly so, we have had our 2 biggest e-commerce weeks in September in the history of the business. So that includes the peak of Christmas. And the Black Friday performance as well. So Julian will tell you all about the product. I can only conclude by the fact that we're seeing those records broken, by the consistency we're seeing across our markets and our channels, that product is having a real impact on our trading performance at the moment. And I think that's what's really quite exciting. I'll just go back to the working capital issue I mentioned earlier. And whilst it's small numbers on this slide, I think what's important to recognise is that when Julian came back in the business a couple of years before I rejoined, there were 19 million units of stock in this business. It was running on far too high a stock number. It was very inefficient. The aim was to try and reduce that against the backdrop of a pandemic when sales were going backwards, which made that not an easy challenge. And you can see from this chart that what's happened over the last 3 years, or three gaps in between years, is we brought it down by about 10.5 percentage points every year. And our aim will be to do pretty much the same this year as well. So what was 19 million of units has come down to around 12.5 by the end of last year, and we will be bringing that down by another 1 million to 1.5 million this year as well. So the working capital is becoming much leaner. The efficiency, the impact that's having on the efficiency of the business is quite significant. And there are further benefits to come from that. And Julian will talk to you about the option reduction program we're about to undergo, which will give us further savings as well looking into the future. So I think, look, it's a tough environment we're looking into. We've given some guidance to the markets for the first time since the COVID pandemic, and that's somewhere between 10 and 20 million of underlying profit for this year. You know, we are confident in how we're performing at the moment, but we're very mindful of what could happen in the markets over the coming months with the inflation hitting consumers and the concern around power bills and all those sorts of things. So we're being quite moderate with our guidance. It's quite hard to put a forecast together in retail at the moment. We're more running a series of scenarios that sort of play it, you know, whatever happens, we've got a set of actions we can take in all these different situations. And the key to this autumn winter really is being agile. But I think a really good start to the year, only getting better as our jackets start to land and take the key brunt of the trading performance at the moment. And that's giving us some real confidence about how autumn winter might play out. And as you know, that is the big season for us. I think that covers the financial stuff. I'll go back to you.
Right, I'll give you some nice soft stuff. So what have we been working on in the last few years? Well, obviously short order is how we've been describing our 12-month-a-year design process. This has been absolutely fundamental to how we've changed the nature of this business and why we can now be forward thinking. So the design process that I inherited was a backward looking 18 months long from sort of design to table, if you like. And bringing in a 12-month design process has meant that we can design products that are relevant for now. And this has been really fundamental. And I pointed out many times that women's wear was our big opportunity. We were historically we've always been sort of 60 men's, 40 women's. Well, delighted to be able to tell you today that we're now 51% women's, up from 41% a year ago. And that really tells you what we've been up to in terms of the product creation and in terms of fashionability and brand desirability. So whether it's a fit of a denim, moving from skinnies to wide leg, which we just simply wouldn't have done, whether it's the Afghan coats that you can now see resonating on TikTok, so fundamentally with young people, particularly sort of the teenage group. So, you know, from a product perspective, we've really made huge strides, absolutely huge strides. Now, what that will mean is, because we now have a short order process that makes sense, and we have a clear view of what products we are making on a long lead time basis, we now confidently can come at the longer lead time product and have an option count reduction. Now that will play through to costs all the way through the business. There'll be savings all the way through, from the amount you photograph, the amount of sample sets, and so on. So there is a large prize to be had, which will be fully operational in 12 months' time, but is in play now. So the starting point has begun. So that's very exciting. Sustainability. You'll know that on my return, my ambition has been to be the most sustainable large brand in Europe, and potentially the world. We're clearly on that journey. So what's fantastic about this journey is that it's starting to really resonate with our consumers now. So 50% of our product has a sustainable bent, i.e. it's organic or recycled filled jackets and so on. Well, actually, from 50% of our products, we are delivering 60% of our sales. And that's very exciting, because that means that the public has moved with us, if you like. And obviously, from an ESG point of view, it's fundamental too. E-com, we've been promising microservices for quite a long time. That has now landed. And what that means is we can now improve on a you know, through a series of additions, we can get better and better and better. So that e-com journey can now start really improving. You've probably seen the photography improve, the journey improve, the payment methods improve. That will all continue. So that's a wonderful journey that we're now on. You also may remember me talking about the Anatwine model and the fulfillment model that we have. We are better placed than most because we have a strong retail position in the market to take advantage of that. And we are now really bearing the fruit of that with new products and this model really resonating through our third-party sites. So that's very exciting. So where we're putting our new products in front of a new audience, the product is really resonating. Now, we intend to take that basic principle across wholesale and more e-com partners. So you will see more of the sort of fulfillment from us and using somebody else's front end more and more and more throughout this business. Stores, all territories positive in a like-for-like sense. We've been working on our rents. They've been coming down. They've been an average of 45% reduction. But also we've been working on the customer journey, as you're well aware, and that's all starting to resonate now. So between the style choices, making that consumer journey easier, more foundation products in the business, we're now able to say that all territories, that's America, Europe, and the UK, are all positive. Marketing, I would say, has made huge progress in the last 6 months. It was sort of lagging behind the rest of the business in terms of catching up. It's now really in a positive place, moving very quickly. We've got 2,300 approximately influencers. You may have noticed TikTok has started to really take off. And that's coming through the sort of teenage product that we've been creating through the short order process. So we've got a very clear, positive strategy, and we know who we are and why we exist now, which is a great place to be. So we've got a very clear message starting to flow through the marketing channels, and it's very much product up. It's not brand down, and I think that's the biggest shift. So really understanding that this is a product business, and if we communicate about the great products we are making, it works. If we start to say buy Superdry because Superdry is cool, that's a very difficult message to actually land. Buy an Afghan coat because an Afghan coat's cool. By the way, it's made by Superdry. That's a very cool message. So that's what's happening. It seems to be working, and internally we all feel very positive about where we are. So obviously the macroeconomic side of life is tough. We have to contend with a weak pound. But we are doing so, we really feel very, very strongly that we're making all the right moves internally to cope with any situation.
That's great, Julian.
I think that's basically it. So should we open up to questions?
That's brilliant. Yeah, thank you so much indeed for updating investors on the call today. And as you can probably see, we've had quite a considerable number of questions come through. So firstly, thank you to everybody for your engagement this afternoon. I think I might start with one from David that reads as follows, and maybe one for you, Julian. How do you see the online versus store trend over the winter months? Do you anticipate sales returning to pre-pandemic levels?
Well, we're obviously on a journey in store, and I would say that's not just us. I think that's generally we've all seen the high streets recover quite strongly recently. We're not quite at pre-pandemic levels, but look, I mean, the realities of everybody starting to charge for deliveries to and from their returns or just to get delivered through ecom is going to have an effect on general behavior, your general sort of feeling. Actually, do you know what? Why would I spend that money? So I do think the high street is going to recover. Whether it will get to pre-pandemic, I don't know, or how quickly. I'm sure it will eventually, but ultimately, it's on that journey. Oh, you've gone on mute.
Oh.
There you go.
You got me? Question from Matthew, who asks, having had a record September, are you seeing more spend per customer? And have you seen any impact over the last couple of weeks in relation to, I guess, just general consumer spending and sentiment?
Look, it's hard to judge consumer sentiment. I mean, the reality is our jackets are selling. So we are brilliant at jackets. I defy anybody to resist that. I think we're the best value branded proposition in the market with the most diverse range, and we're sustainable. So we have sustainable fills across our entire range. So obviously our ASP has gone up as a result of jackets resonating so strongly. Hard to talk about the general sort of sense because are we doing well? We seem to be.
Sure. Talk around inventory levels. Des asks, what is your assessment of the level of inventory in the wholesale channel, and if the product has improved, when do you expect them to reorder?
So most of wholesale is pre-order. So that is, we've got a reasonable view of what's coming. I mean, there obviously is in-season ordering. But our over performance in retail might mean there might not be too much stock available for any last minute grabs. Sorry, what was the rest of the question? My brain.
Are you happy with the wholesale stock levels? We don't really hold stock.
Yeah, we don't hold stock for wholesale. We hold stock for retail essentially.
And if they're spare, we can share it. But as Julian says, at the moment, the way things are going.
Perfect.
Unlikely, but generally our inventory levels are coming down. So year on year, we expect another 1 to 2 million decrease in our total inventory level.
Lovely, thank you. Tom changes the subject slightly and he says, can you talk about the technology strategy and the findings of your tech committee, what they've established and how you're looking to link that general strategy to sales?
Yes. So the technology strategy in the short term is very much getting on with those two main projects. So they are essential in so much as the merchandising system is almost the brain of this business, and it's crucial to all the data work we want to do going forward, and that's quite all encompassing in terms of replacing that. And the web platform, I think anyone who shopped the web last year will know that we had a lot of work to do there, and there's a very full development program for this year to deliver the benefits of that. The tech committee thus far has largely been around the governance on those two projects, but in the meantime has also been identifying what the remaining plan will be for the next 4 years of our 5-year plan. And I think that the key bit in here is getting us to be a more data-led organization. And some of that's quite simple. It's in sort of classifying our wholesale partners into strategic partners and more tactical partners, and changing our behaviors with them on the back of that, and learning from their sales performance and helping to influence their buys going forward and make their businesses more successful. And some of it's about really getting granular on how customers interact with us in our stores and our website as well. So we are very early on the curve in terms of being able to use data in a powerful way in this business, and that's where the investment will come from going forward. But in the short term, no, it's very much about e-commerce and merchandising.
Great, thank you. A further question here from Des, and I guess maybe one for you, Sean, I don't know, but what are the specific hurdles to the refinancing that you've not yet been able to surmount?
The ones you're reading about every day in the papers, essentially. So, we would like to have done a refinancing with the tier one banks, the normal banks, the Lloyds, the NatWest of the world, but it's quite difficult right now to convince them to take a retail proposition to their credit committee, given the backdrop that they're reading about all the time. So we are talking to a whole range of people that are much more focused on the asset-backed lending facilities now. My expectation from that is we will come out with an outcome that's a lot more flexible for us, but will come at a price premium. But that is just the conditions in the market that are causing the headaches at the moment. But I think, as I said in the presentation on Friday, we've got another announcement to the city in 6 weeks' time, and I'm very much hoping that I'll be able to give you a full update at that point.
That's great, thank you. John H asks, in the results you said that Deloitte had highlighted internal control issues in the last 2 audit reports. Was this related to their resignation?
Yes and no. So they've been with us for 5 years, so the partners were going to rotate anyway. So there was an opportune moment to part company. I think it's very well publicised that certainly all the big 4 are reviewing their audit portfolio, and those audits that are deemed slightly higher risk, they're tending to want to be less involved with. And obviously, given those issues that have been publicised in our annual report, we are one of those at the moment. I have to say, I think they've been very impressed with the program we put in place to fix that. It's a 3-year program, so it was never going to get fixed in the first year in time for that 5-year cycle. So we're 1 year in. There's some new smaller IT platforms that have gone into finance to fix some of that, and we will be able to leverage off them this year to make it a much better process for the new auditor when we announce them for next year.
That's great, thank you. Turning to another question from Des. Thank you, Des. How would you characterise the business potential execution risk for the spring-summer 23 season compared perhaps to previous seasons at this time?
Well, but compared to the last couple of years, I mean, post-COVID, I would say the execution risk is far less. Yeah, I mean, I don't see any particular. I mean, we're the product's getting better. Our deliveries are more accurate as to when they arrive. You know, the supply chain is sort of more constant, if you like, in terms of there are less freight issues. Yeah, I mean, I personally don't see any major issues. In fact, you know, in a lot of ways, we've got some very exciting women's wear, in particular, short order opportunities, which I'm pretty convinced are going to be successful.
And then finally, maybe if we can take this was a pre-submitted question that we received ahead of today's meeting, I guess around initiatives that you may have in terms of getting more footfall through your stores. Are there any planned initiatives that you have for the remaining of the year?
Make better product. I mean, the bottom line is, what you're going to do. You're going to put Morris dancers in front of your store and sort of drag them in. No, the reality is, if you create desirable product, and what you're finding is if you cater for the particularly for the audience that is shopping on the high street, which is very much the young, and you put product in front of them that they want, they start talking about it themselves. So not only have you got your own TikTok campaigns and so on, but actually they're creating their own TikTok campaigns for you. So great product drives people in. And what's wonderful actually about our industry is I would say every 10 years it goes through a massive change, a generational change. And I would say we're going through one now. And I'm very excited about that sort of teenage consumer and are we ahead of the curve in terms of providing what they want? And I would say we are.
That's great. Julian, Sean, thank you very much indeed. I think we've taken pretty much all the questions that have come through from investors this afternoon. So thank you to everybody for your time and your engagement. In fact, there's just one more that's just coming from Stephen, if I may just pose this one to you, who asked that given the refinancing negotiations, can we assume that we're unlikely to declare any dividend anytime soon?
Yeah, yes, you can. Yes, you can.
Perfect. Okay. Well, look, Julian, Sean, thank you very much indeed for updating investors. Look, I'm shortly going to redirect everybody on the call to give you their feedback, their thoughts, their expectations. But I wondered before doing so, if I may, Julian, just ask you for a few closing comments, and then I'll ask investors for their feedback.
So look, I mean, it feels like internally we've done some great things. So in terms of product, in terms of sustainability, in terms of our e-com journey, in terms of our stores, I think we're really in a good place, or on a really good journey. The bit that I would say we're not so good at and haven't really focused on, which is now going to be the absolute focus of the business, is to really bring those wholesale partners with us. So I think we haven't, because of COVID, had the interactions with our wholesale partners that we could and should have, and a really concerted effort to bring them on our journey is now the focus of the business. So I say it's a negative plus a positive, because it's an opportunity, and I think we can be so much better and deliver so much growth through the wholesale channel. But I just think we needed to, as a business, be ready to focus. We are now ready to focus.
Julian, Sean, thank you very much for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company.
Definitely.
On behalf of the management team of SUPERDRY PLC, we'd like to thank you for attending today, and good afternoon to you all.
Really appreciate it. Thanks,
Thank you.
guys. Thank you.